Okay, students. Now, earlier we have discussed oversubscription, undersubscription, security premium, and treatment of the security premium, how to record at the time of passing the journal entries as well as in the balance sheet. Now, we take the next topic which we are going to start. That is your purchase consideration other than cash. It means assets purchased by the company, and after purchasing, company is not going to make the payment through cash. Company is issuing shares other than cash. Means company can make the payment by issue of shares, by issue of debentures, or you can say partial issue of share or partial payment made by the cash. This topic is known as purchase consideration other than cash. Now come very simple questions. See here, all of you, I am telling you. Amrit Dhara Limited issued 800 shares of 100 each at a premium of 25% as fully paid up consideration of the purchase of plant and machinery of rupees 1 lakh past journal entries in the books of the company. It is the question number 29. See all of you. As per this question, we are purchasing, company purchased, Amrit Dhara Limited purchased, and after purchase they are going to issue the shares. Which shares are issued at the 25% premium. So first of all, we have purchased plant and machinery for the value of rupees 1000. So now pass the journal entries. Plant and machinery account debit. Debit what comes in? Plant and machinery account debit. And now we are going to purchase from whom? Name of the vendor not given. Then you should write to vendor's account. Clear? Narration you write by yourself. For the value of rupees 2 lakhs. Value of rupees 1 lakh, not 2 lakhs. This point is clear. So now plant and machinery account debit to vendor's account. After this, now vendor is making payment. Vendor is getting the payment from Amrit Dhara Limited by issuing 800. Now here vendor's account debit. Clear? And 2, you are issuing shares. It is not mentioned which type of shares. Then you should write equity. If it is mentioned, then accordingly. Now equity share capital account. And after this, the shares issued at the rate of at 25% premium. So here you have to write security premium reserve account. Now shares issued to the vendors at the rate of rupees 100 is 25% premium. But here you have to find out how many number of shares you are going to issue to the vendors. Now total purchase consideration is rupees 1 lakh, you are saying, and face value of shares, see all of you, 100 each, and 25% premium, it will be 125. 100 rupees is face value of share, 25 is premium, now 125. Now it will be final result, you will get the number of shares. Clear? Now 8 times, understood, it will be 1000, now 800 shares. 800 number of shares are coming, which Amrit Dhara is going to issue the vendors. Now here 800 shares, value of one share is 100, understood. Now it will be 80,000 equity share capital. Rest is your security premium 800 and 25 is the premium. Clear? It will be now 20,000. Now here 1 lakh. What is clear? So in the narration you must write 800 shares issued to the vendors at the rate of ₹100 each at 25% premium. Understood this fact? This question is completed. On the behalf of this question, you are able to solve some questions like 28, 30, 31. These are the simple questions, and 32 also. Rest we are going to see the another type of question where like 33C, where partially payment made by check and partially payment issued by shares. After 29, see all of you question number 33. Because this question, on the basis of this question, you can solve. Now see the question number 33. Here bete under the question 33, Jain Limited purchased machinery costing 10 lakhs from IR Limited. 50% payment was made by check and remaining 50% the company issued equity shares 100 each at a premium of 25%, just ahead one step more than the previous question. Jain Company, you are purchasing machinery costing ₹10 lakhs. At first you have to pass the entry for the purchasing of machinery. Pass the entry machinery account debit to Jain and Purchase Limited purchasing machinery from IR Limited. Write down to IR Limited account. When machinery purchased for the value of rupees, how much weighted? 10 lakhs. Write down here 10 lakhs. There is no any problem. Clear? So machinery purchased from IR Limited for the value of rupees 10 lakhs. After this, now see this question clearly. Now 50% made by check, clear, and rest is issued for issued shares. Who is the receiver? Vendor. Vendor is the IR. Now write down IR Limited account debit to bank account. 50% of the purchase consideration 10 lakhs. It will come 5 lakhs. Write down here 5 lakhs. Then narration you write by yourself. Then checks issued to IR Limited. Out of 10 lakhs, 5 lakhs you have already made the payment. For the rest you are going to issue shares. Again getting IR Limited account debit. Okay. You are going to issue what? Write down to equity share capital account, and this shares issued by the company at 25% premium. So write down here security premium reserve account. Then narration you have to write certain number of shares issued to this. Now find out how many number of shares. Here 5 lakhs which we have to make the payment. We are going to issue shares. Value of shares is ₹100 at 25% premium. Now 125. Now 125 4 times 500, it will be 4,000. So number of shares which we are going to issue the IR Limited 4,000. Here 4,000 shares at the rate of 100. It will be now how much? 4 lakhs. Clear? And this share you are issuing 4,000 at the rate of 25% premium. It will be 1 lakh. It will be 1 lakh. So your total will come 5 lakhs. Understood? You will pass the combined entry for this. Clear? If you want, you may pass the separate entry like this for payment issued by check and payment issued by shares. Otherwise, you may pass the combined entry. Understood or not? where I will be intended to be debited to bank, to equity share or to security premium sir. Understood? This question is completed. Okay. After this, we are going to solve the other type of question through which we are able to solve most of the questions.